that comes up on your screen. I mean, basically, how many times has Bitcoin sold off 50% or more? Key is from an all-time high, meaning having achieved a new record, and you see it there on your screen. It's kind of every year, year and a half. This one is currently 63%, the sell-off now from its peak of November. And the question is, does it go more? That's my thinking. Let's look at the charts. The first chart shows where we are in relation to where we've been and the authority and importance of the 30,000 level. So we had that recent plunge about 3 weeks ago, dropping from 36 to 30,000 in about 5 sessions, and actually undercut, went as low as 25 intraday, and then we've been stuck here. Now, the longer you sit at a level without bouncing, the more at risk you are of finally undercutting that level, hence the arrow that I've drawn. So where might we be headed? Look at the next 2 charts. The first one is a longer term chart citing exactly that level, the 30,000 level. Now, were we simply to break and break hard here, the final chart puts it in context. The key reference point is its spike high of late 2017. And while it doesn't look like much on the chart, that's essentially dropping to 20,000. And I think it happens pretty quickly.
Mike, what's the trade?
Yeah, so of course we can't really trade options on Bitcoin itself, but there are plenty of equity proxies. Many of them are very well known. Certainly MicroStrategy would fall into that camp. And so, of course, would Coinbase. And Coinbase is the one that I'm taking a look at. Now, an important thing I think I'd just like to mention about this whole space is that, you know, the crypto area tends to skew probably a little bit younger in terms of the investor base. And just as a reminder to some of the younger investors that might be participating in it who weren't participating in the tech wreck in 2001 and 2, what tends to happen is prices will swing a lot further than you expect. And what ends up happening when you do see these kinds of declines, you'll realize that we've come, you know, down so far, it becomes very difficult psychologically to try to press a short in that circumstance because everybody gets very used to the notion that you should buy every dip. So one of the ways that you can do this is actually very similar to the trade that we were talking about in the first block about XLI. And I'm specifically looking at another diagonal put spread, specifically in this case looking at the September 65 puts, purchasing those. Now you'll notice, and this is not surprising given the volatility that we see both in all of the cryptos, but anything that's associated with them. So you'll notice that the September 65 puts in Coinbase cost $16. That's well more than 20% of the strike price. Of course, that also applies to nearer dated options. So we're looking at selling the June 60s. Those were also over $6. And once again, the idea here is to try to collect the decay on an accelerating basis that the near dated options will have. You'll notice when you take a look at the payoff graph that if Coinbase simply stays roughly where it is, this would see profits. And of course, ideally, it would see profits if it drops a little bit more. Now, it would need to fall below 45 before we would expect to lose on the downside. That would be quite a significant move lower, though, from where we are right now. I mean, that's we're talking about another third again, lower than where the stock is currently trading.
Is this a trade you'd put on, Tony?
Let's take a look at some of the the levels here that Carter's referring to in Bitcoin before I comment on that. If we look at the 30,000 level, which Bitcoin has broken down, and Carter's charts show you back in 2017, that $20,000 level, that's your immediate target. As he says, I think we're going to get that really quickly. As Mike said, things can go a little bit further than we expect. The downside target beyond 20,000 is 13,000. So we're really talking about potentially another 50%, more than 50% haircut to where Bitcoin's currently trading right now. As to what does that correlate to in terms of Coinbase's stock price, that's the difficult thing to nail down at the moment. So from my perspective, if you look at Coinbase, there's clearly a chart that's very oversold, and it's very difficult difficult to continue to chase this. But you did have a quite nice bounce here, if you will, over the past couple of weeks, and that potentially is your opportunity to re-enter a short. So while I agree with Mike's trade on a potentially re-entry on a short position here for Coinbase, for me, I'm not as keen on this particular diagonal spread. But for me, just to explain a little bit, the diagonal spread makes a lot of sense because of the difference in implied volatility between the September options that he's purchasing and the June options that he's selling. The Septembers are currently trading about 120% volatility, and the Junes are trading at 140%. He's selling the short-dated, higher volatility options and buying the longer-dated, lower volatility options, despite as elevated as they are. My concern here is really the short strike here, the $60 strike that he's using, because we have a gap fill at around $60. That's really where I think that the stock can trade down to very quickly. But my concern is that this is going to get back down to those new all-time lows, especially if we talk about where Bitcoin potentially can trade down to, that 20,000 and potentially 13,000. What that means for Coinbase, hard for me to say, but I think that there could be some downside and risk that it does get below $45 relatively quickly.
Up next, answers to some of your top questions after another wild week in the markets. We're taking your tweets when Options Action returns.